got on board Apurva Prasad, who is joining in, institutional analyst at HDFC Securities, as well as Mishra from Gartner. Thank you so much, gentlemen, for taking time out and joining in. Let's get a sense from you first up, Mr. Mishra, as to whether or not now you're seeing perhaps the worst being baked in for the IT space.
So I would not frame it like that, and thanks for having me here. I see it from a very different perspective, and the way Gartner has forecasted the various spending on the IT services, if we look at it, every year we are going to see the growth. Now, this year may be a year of caution, and some of the budgets may have been paused. But next year onwards, we see that return to growth is going to happen. And the IT services spending for the next 3 years is going to be in the double digit, which we have not seen in the past. So I am a bit optimistic from the point of view what we see. In addition to that, I would say that every year, I, as an analyst, go through at least 700 to 800 client situation across the world. And hardly any conversation I am hearing that the client would like to stop their spending. But having said so, I also understand from some of the providers that whatever the pipeline they have forecasted in the past may not be relevant as of now because of the kind of pause which they see in the market at this point in time. But I don't see that this particular pause is going to be lasting for, in 2024. And we see that, the growth will return in 2024 the way it has been, perceived earlier.
Okay. Apurva, nobody is talking about a slowdown. Large deal wins are there. They were there last quarter. They were there, Apurva, even before the quarter before. But if I look at what IT companies are telling us in terms of their guidance, their outlook, and also their body language, it's not very constructive. So, Apurva, if large deals are coming through, why is that not getting translated into real quarterly numbers?
So, thanks for having me. There's a bit of a disconnect here because number one, there has been an anticipation of slowdown/recession. If you trace back early part of this calendar year, I think those timelines are probably moving ahead. But I think that there is a sense of caution that enterprises do have because of the slowdown in the overall macro scenario. So that's actually, it's going in that direction. That's one. Second, point on contracting, that continues to remain fairly strong, but you have to see the nature of those deals, which should be very different as compared to some of the deals that you would have seen companies talk about a year back or a couple of years back. So there is definitely a lot more focus on cost optimization. So if you look at most of these large billion-dollar plus deal announcements that some of the larger IT companies have made. So most of them are centric around that. So it is building in, number one, some form of caution by enterprises and also cost optimization. Number two, there is a prioritization of projects. So a lot of work which was happening, which was more discretionary, that's not part of the volume or the scope of work. So that, which is why there seems to be like a disconnect. But what we believe that over the next couple of quarters, that should start to normalize as some of the largest spenders continue to allocate large sums towards tech spend. So those numbers are growing still. And the pause in the actual rollout of programs can probably get released over the next couple of months.
Mr. Mishra, that's the other thing. While no one's worried about what the long-term prospects are, especially given the multiple large deals that have got announced recently, right? And 4 of them are these mega $1 billion plus kind of sizes. But it's more the near term. You don't know whether what's happening within IT is a structural issue or is it temporary? And the management commentaries as well don't give you clarity on the same.
uncertain. And when it comes to actually technology world, it becomes more as uncertain because we don't know what we don't know and how it is going to unfold. Because number of variables are too many. And that is where you will be able to see that some sort of cautious optimism may be there. But at this point in time is more of a rationalization, and there are so many things, shifts in technology which is happening, and there are more things which are going to come. We are talking about at this point in time that how Gen AI is going to disrupt the market. I'm more worried about, how the autonomous business is going to disrupt the market at this point in time. So, optimism, that sort of an optimism will always be there. And also there should be some amount of pessimism will also be there because of these complexities which exist. But I would say that, technology is like a booze. When you are having trouble, you spend more on it. And when you are actually having the good times, you spend on it. So there is nothing much to worry about. Yes, the providers will be a little bit more cautious because they built a pipeline which was used, and they were trying to chew more than they can swallow at some point, especially after the COVID period. It has been kind of, their pipeline was exploding, and you could have seen the impact on attrition rates, which went up, which has started stabilizing, and it has come down significantly. But having said so, this sort of a challenge, which you have said, is going to continue, and we have to live with that.
So, Apurva, wanted to just understand from you as well as to what the outlook is then, given the fact that we have seen some large deal wins being announced by a lot of the IT majors. Does this increase the visibility for the second half and beyond?
Yes, most certainly it does. It does help the overall visibility near term. We still, however, do think that the second quarter will still be the soft quarter for the sector, and then we do expect normalization 3Q, 4Q onwards. So that's our current base case. And some of these deals, they do give in good visibility, but that's more Q4. And I think what it's going to support is this acceleration back in FY25, because the full impact is really, just it's going to come up in the next couple of quarters. So I think the acceleration in FY25 has come from very subdued FY24. Looks to be a reasonable probability right now.
Mr. Mishra, a very simple question. What would be the impact of AI? Because AI means less manpower. The Indian IT companies up until now have followed a model where you have advantage of scale and skill, and you keep on adding manpower. That is how your billing rates improve. That is how you've been able to grow. But if AI is going to be reducing the workforce, then don't you think this is going to be a reversal for the Indian IT sector per se? The core, in a sense, gets challenged.
So I will agree to disagree over here that Indian IT companies have been solely depending on labor. And now, shift from labor to technology arbitrage is not something new. It has been there for 4 to 5 years now. And I have been seeing this shift very, very closely, and the way it has been impacting their businesses. Now, many of them have been proactively doing creative destruction of their own business and operating models for so far in order to make it happen as well. Because if they don't do it, somebody else will do it, which will have a much, much larger impact on their businesses. So it has been there, it has been optimizing. And if you look at from a client's perspective, what client today is looking for is more value than cost. And somewhere, cost is also very important. It may be number 2 or number 3 priority at this point in time, but the cost, the overall operational efficiency is becoming more relevant for the end customers. And AI is a kind of thing, and the kind of technologies which AI enables will help us to optimize the environment, drive operational efficiency, and at the same time, it can optimize the cost. So it has been there, and it has kind of, dented the kind of top line which they have perceived earlier, or kind of, work impact on workforce, which is there, which already is there, and it will continue to be there. what can happen is that, we will move towards more hyper automation and then towards the autonomous kind of business models, which are going to evolve from 2025 to 2040 is the era of autonomous business, where even the kind of decision-making power will shift towards the machine. We are looking at a kind of, organization where I say that the owner and its dog will be the only one who will be employed, and the responsibility of the dog will be to ensure that the owner doesn't touch anything. So that's sort of a business model. Now, when it will happen, how it will happen, how fast it can, impact the world, it may happen in phases, and in various forms and shapes. But this is the kind of reality we are moving towards. Whether it is a threat or an opportunity, depends on how we look at it and how we leverage it.
So, Apurva, before we wind down, is there value on the table? Should one be buying IT right now? And if so, what are your preferred bets?
Absolutely. I think selectively, most certainly, more than all out. But yeah, I think that's a stance that we do have. We have a selective stance on the sector. So if I have to name a few stocks within the tier ones, within the large caps and LTI and Mindtree, I think is certainly an opportunity. If I look in the mid-tier IT, then persistent systems, and if one has to look within the small cap space, then Birla Software. I think these would be some names where there is a good opportunity. I think broadly, the mid-tier IT growth outperformance over tier one can continue. Having said that, tier one IT valuations right now are pretty much near the long-term averages. So to that extent, there is some comfort from a valuation standpoint. But at the same time, we do believe that this premium that mid-tier gets on tier one, that's likely to continue much higher levels of sustainable growth.
To sort of stretch that point forward, what would be your outlook when it comes to individual companies? Do you think that we are seeing a catch up with the mid-cap IT companies to the large caps, or there is going to be a stark difference in performance overall? Mr. Mishra, that question was for you.
Yeah, so see, the thing is that, from a stock perspective, I cannot comment on it. But what I can say that the organizations are going to be impacted by the kind of technology shifts which is happening. Now, we can see more merger and acquisition, more divestment, more the changes in the operating model or the business models of the organization. Some companies will perform, some will perish, and this is going to shift the market. But spending on the technology is going to grow, and it is going to be more and more relevant for the businesses, because the difference between the business and the technology is diminishing, or it has diminished already. And hence, technology is no longer a kind of a choice. It is a kind of a requirement which you need to have in order to perform or succeed. Whether you are in crisis or whether you are having a good time at this point in time, technology is going to be the way forward to take you forward. So that is where I see that, the organizations will change in order to leverage it. Those who cannot change will have to find out something else.
Sure. Okay, Apurva, Mr. Mishra, thank you both of you for taking the time out and joining in today and giving us an overall view of how to approach the IT sector now. Okay, that's that on